Folks, listen to me. I need your undivided attention right now, because what I'm about to tell you could save you thousands of dollars, or it could cost you dearly if you ignore it. The government has rolled out a massive change to the tax code, and it's set to go into effect on January 1st, 2025. This change, known as the Property Tax Modernization Act, is aimed squarely at every single person who owns property in the United States. That means you. If you own your home, a rental property, or even a small piece of land, this is your wake-up call. The clock is ticking, and what you do between now and the end of the year will determine whether you keep your hard-earned money or hand it over to the IRS unnecessarily. The official name is the Property Tax Modernization Act of 2025. At its core, this law fundamentally changes how you deduct property-related expenses on your federal income taxes. This new system requires you to prove not just what you paid in taxes but also the specific purpose of those funds through the Verified Expense Deduction, or VED. Instead of a simple deduction for property taxes paid, the new law splits your property tax bill into different categories for federal deduction purposes. Only the portions funding essential infrastructure and safety services will be fully deductible under the old rules. Any portion funding community enrichment services like public parks, libraries, or local arts programs will now fall under a separate, much more limited deduction category. The short answer is, every single person who owns real estate, if you have your name on a property deed, this message is for you. Let's start with the classic American family, the homeowners. You bought your house, you're raising your kids, you pay your bills on time. You've always taken the standard property tax deduction without a second thought. Starting in 2025, that approach is a recipe for overpayment. If you live in a community with great schools, beautiful parks, and a new library, a significant chunk of your taxes might now fall into the less deductible category. Next, let's talk about small-time landlords and property investors. For you, the stakes are even higher. This new law complicates your bookkeeping immensely. You can't just write off the entire property tax bill as a simple expense anymore. The single biggest danger of the new 2025 tax law is what I call the overpayment trap. It's a pitfall that millions of honest, hardworking people will fall into simply because they aren't aware of the new rules. Here's how it works. You get your property tax bill, you pay it on time like a responsible citizen, and you keep the receipt. But under the new VED system, the IRS now requires a certified breakdown of that payment from your local tax assessor's office. Without this specific document, the IRS will automatically apply a default formula. And folks, this default formula is not in your favor. This discrepancy means a huge portion of your rightful deduction vanishes into thin air, and your taxable income shoots up. To truly understand the danger lurking in the tax code, let's look at a real-world example. Meet the Millers. They're a hard-working family with 2 kids, a mortgage, and a life filled with school runs and soccer practice. Their annual property tax bill is $8,000. For years, like millions of others, they've simply deducted this entire amount from their federal income taxes, assuming it was the correct way. But they're completely unaware of the new Property Tax Modernization Act. It's not that they don't care, they're just overwhelmed. Between juggling jobs and managing the household, tracking obscure tax code changes wasn't on their radar. This is a common trap. A common mistake is assuming your town will send this information automatically. They won't. Because the Millers didn't know they had to proactively request it, they never obtained the crucial VED certificate of allocation from their local tax office. This certificate is the only document that proves what portion of their taxes funded essential services. Without it, instead of getting credit for the $6,000 that went to schools and fire departments, the system defaults to a lower, standardized amount, allowing a deduction of only $3,200. The result? Their federal tax bill is now $616 higher than it should be. That's money for a car payment or groceries, literally thrown away because of a simple, avoidable paperwork oversight. Now let's look at Sarah, a savvy real estate investor. She owns a 4-plex rental property and relies on the rental income to build wealth for her retirement. She thinks she has all her bases covered. Her annual property tax bill on the building is a hefty $15,000. As a smart business owner, she has always deducted this entire amount as a direct operating expense, reducing her taxable income. Here's another common mistake. Assuming your accountant is a specialist in this niche area. While competent, her accountant files the return as usual, unaware that the VED certificate of allocation is now required for investment properties too. This oversight just cost her an extra $1,080 in federal taxes. For a small landlord like Sarah, that's not just a number. That's an entire month's worth of cash flow from one of her units. Gone. It's the equivalent of an unexpected major repair, all due to missing one piece of paper. You are not going to be a victim of this system, you're going to be a victor. The system benefits from complacency, so your battle plan starts today, not next April when it's already too late. There are clear, actionable steps you need to take to build your defense, protect your assets, and ensure you pay only what you legally owe. This is about being prepared, not paranoid. The first step is to proactively contact your local tax assessor's office. Do not wait for them to contact you. Be polite, but be persistent. Your mission is to ask them one simple question. How can I obtain my VED certificate of allocation for the 2025 tax year? This document is the official proof of your property's allocated value. Your next step is to go to your city or county's official website and look for the publicly available municipal budget for the current year. Download and save this document. Look for line items related to property tax revenue. While it's not as good as the official VED certificate, it can serve as crucial backup evidence to challenge an unfair assessment. Finally, you must have a conversation with your tax professional. Ask them specifically about the Property Tax Modernization Act. This legislation changes how property values are assessed, impacting homeowners and investors alike. If they sound confused or dismissive, that is a giant red flag. It means they are not equipped to navigate this new landscape. You need a professional who is on top of these changes and can properly advise you. Don't be afraid to seek a second opinion from an expert. In this new tax world, the person with the best records wins. Your greatest defense against overpaying the IRS is meticulous documentation. The VED Certificate of Allocation is the golden ticket. It is the official document the IRS wants to see. You need to create a dedicated file for the 2025 tax year specifically for this issue. This file will be your shield. Once you get the certificate, make multiple copies. Keep a digital scan on your computer and in cloud storage, and put a physical copy with your tax records. Knowledge without action is useless. The Property Tax Modernization Act has changed the rules, and waiting is not a strategy. The time for learning is over. The time for doing is now. Today is the day you take control of this situation. Don't let bureaucracy dictate your financial destiny. Here is your immediate to-do list. First, set a reminder on your phone for the first week of every month to check on your VED certificate status. This simple, 2-minute habit is your first line of defense against costly oversights and bureaucratic delays. Your first action item is to make that initial call to your local tax assessor's office. Do it this week. When you call, ask for a checklist of required documents and confirm all deadlines. Don't hang up without clarity. By being prepared, you ensure you can claim the maximum legal deduction you are entitled to, potentially saving you hundreds or thousands of dollars. For homeowners, that's a vacation. For investors, that's capital to reinvest. This preparation is your key to unlocking those savings. While everyone else is scrambling and panicking next tax season, you will be calm and confident. You'll have your paperwork in order, your questions answered, and your savings secured. You are the CEO of your own household. A common mistake is passivity. Don't assume the system will work for you. Proactive management is the only way. You must be the one to lead the charge. Take these steps. Build your plan. Execute it with diligence. Seize control of your financial future, because no one is going to do it for you. Your future self will thank you. Now go get it done.